For as long as people have been trading, they've been staring at these squiggly lines on a screen, trying desperately to predict the future. It's called technical analysis. And yeah, the name itself sounds complex, a little intimidating, maybe even boring. But what if it's not actually about math? What if it's not about machines at all? What if it's about us, about people? That's what we're going to dig into.
When you hear technical analysis, you probably picture something exactly like this, right? Some Wall Street guru pointing at a chart that looks like a spaceship's control panel. The source material we're looking at even jokes that it's just poking the screen with a pen. And you know what? That's kind of the whole problem. That perception is the very first wall we've got to knock down. Because, honestly, the biggest problem with technical analysis is the name itself. It's the first thing that trips people up before they even get started. I mean, let's just be real for a second. The word technical is just scary. It makes it sound like you need a PhD in advanced mathematics just to have a conversation about it. The source calls the name unfortunate, and I totally agree. So, you know what? Let's just rename it. Let's reframe the whole thing. Think about it like this. On one hand, you have technical. It sounds complicated, mechanical, all about numbers. But what if we called it graphical analysis? I mean, we're just looking at graphs. Or even better, what if we called it behavioral analysis? Because that's what's really happening here. You're not analyzing formulas. You are analyzing the collective psychology, the fear and the greed of millions of people, all displayed on one screen.
Okay, so if this is really about human behavior, what's the actual philosophy behind it? Well, it turns out that this entire field, which looks so incredibly complex from the outside, is really built on just 3 surprisingly simple ideas.
That's it. Seriously, the whole shebang. Every chart, every indicator, every strategy, it all comes back to these 3 core beliefs. So let's quickly unpack what they actually mean. First up, the market knows everything. This just means that the price you see right now, that's the ultimate summary. It has already absorbed all the news, all the earnings reports, all the gossip, all the fear, all the hype, everything. So in this worldview, the chart itself is the only truth you really need. Second belief, prices move in trends. The market isn't just a chaotic random mess. It moves in recognizable directions, up, down, or sideways. And the whole game really is just about spotting which direction it's heading in and hopping on for the ride. And number 3, this one is the big one. History repeats itself. Now, this isn't some kind of magic. It's all about human psychology. The core emotions that drive markets, fear and greed, they haven't changed one bit in hundreds of years. So the patterns those emotions create on a chart, yeah, they tend to show up again and again and again. And check this out. This is the perfect proof. This W shape you're seeing, that's a classic chart pattern that traders have been documenting for over a century. But this particular chart, this is from last week. It's like looking into a time machine. It shows you right there that human behavior in markets is unbelievably consistent from one generation to the next. Okay, so if spotting trends is the name of the game, how do we actually do it? This is where we get a little more practical, and it's where that old trading mantra comes from. The trend is your friend. And at its most basic level, it's pretty simple. On the left, you've got an uptrend. See that? It's just a staircase of higher peaks and higher valleys. And on the right, you've got a downtrend. It's the opposite, a series of lower peaks and lower valleys. Seems pretty straightforward, right? Well, this is exactly where things go wrong for most beginners. They'll see a clear trend, they feel super confident, and then bam, they get completely wiped out. And why? Because they're looking at the market with tunnel vision, focused on just one single time frame. Look at this. On the left, we're looking at a 5-minute chart. And oh man, it looks like an absolute disaster. The price is tanking, you'd probably panic and sell, right? But wait, perspective changes everything. Zoom out to the 4-hour chart on the right, and you suddenly see that the crash, it was just a tiny blip. It was a little bit of noise inside a huge, powerful uptrend. See? Context is king.
All right, let's move on to the next big idea. If trends are the direction the price is moving, what stops it from just going up or down forever? Well, you can think of them as invisible walls in the market.
In the lingo, these walls are called support and resistance. Support is like a price floor. It's a level where buyers keep showing up to buy, supporting the price, and stopping it from falling any further. Resistance is the opposite. It's a ceiling. That's a price where sellers come in and start selling, putting a lid on how high the price can go. The price often just bounces between this floor and ceiling. But, and this is where it gets really cool, those walls can break. When the price gets enough power to smash through a ceiling, that resistance level, that old ceiling often does something amazing. It transforms. It becomes the new floor. This flip is a huge deal in charting, and it's how you can start to map out the structure of the market.
So we've covered trends, we've covered timeframes, and we've covered these invisible walls of support and resistance. Now let's bring it all home and connect it back to that very first idea we started with. Because at the end of the day, these charts, these trends, these levels, they aren't just lines, they're feelings. A trend line is the visual path of collective hope. A support level is a floor built brick by brick with greed. A resistance level is a ceiling made of fear. What we call technical analysis, it's really just the art of reading the market's mind.
Which kind of leaves us with one last big question to think about. If every single pattern and every line on these charts is just a footprint left behind by the epic battle between human fear and human greed, then what are we really analyzing here? Are we looking at finance, or are we just looking in the mirror?